Are you looking to take your crypto trading to the next level? If so, why not check out 𝗕𝗘𝗪𝗏, linked in the description down below. They're running some fantastic offers at the moment, such as cashback. When you deposit 50 USDT, you can get $10 USDT back. They do sign-up bonuses all the way up to $8,000, and they are also doing some lucky draws at the moment. Above and beyond these things, though, we are also teaming up with 𝗕𝗘𝗪𝗏 to launch a weekly competition that will happen every single week. Using the affiliate link in the description down below, you'll be able to take part in this trading competition, and the winner will ultimately get $100, right? So the person who has the best ROI percentage within the 1 week period will win $100 USDT. This particular competition is ending today. It will start again on Monday, and it will happen every single week. So why not take part? If you're looking to supercharge your crypto trading, why not sign up to 𝗕𝗘𝗪𝗏, linked in the description below. Take advantage of all of the offers that are available and participate in our weekly competitions. Have you got what it takes? Check it out, linked in the description down below. In this video, guys, we're going to be jumping down into the world of Bitcoin. We're going to be taking a look at the bigger macro levels. We're going to be taking a look at the weekly close, what that might mean for BTC. So taking a look at some other analytical indicators that we've not looked at for a while that could potentially give us an indication as to kind of what things are or what's potentially going to be happening next for BTC. There's a lot of things to kind of talk about and discuss in this video, so let's get right down on into it. And what we're going to do is we're going to start by talking, I think, a little bit about our kind of positioning that we are in at the moment. Okay, so here we have Bitcoin paired up with USDT, 1 week chart. Binance is the data source. You can see that we have been in this pretty bearish state for a while, and according to Smart Money Concepts, we are still in well, we've actually just had a change of character to the upside at the minor level. We're still bullish at a bigger macro level. That hasn't changed through this entire bear market. We've been in that bullish state of play, and we've got some interesting things that have been occurring. We've also had this push upwards towards 27k. We can see that we've hit on, according to USDT anyway, 27,756 on the high side of things. Now, I was talking about this a little while back. Unless we can cross up higher than 32,917, it's unlikely that we're going to break out of our structure here, which would be a W, X, Y, X, and Z kind of situation. And of course, if we do go up higher than 32,917, it would pull into question whether or not we do a big kind of ABC structure like this. Okay, now we know that we are not doing something like this. Okay, a lot of people are really hyped about the idea that we're doing a trend to the upside, but we do not meet the requirements of a trend to the upside. As I spoke about yesterday, and pretty much every single day, it does appear that we actually have a corrective structure to the upside here. From this morning's video, you can see some zigzags, double zigzags, and things like that occurring as well. So there's a lot of stuff to kind of consider in here, and how its artificial movement to the upside is trapping out a lot of people. I spoke about yesterday about the potential for a biggest bull trap in Bitcoin's history. I do think that is something that is still in play, and I do think that we're likely to see a bit more to the upside before we see the rug getting pulled from beneath people's feet and we start to move on down. There's a lot of things to consider with all of this, but ultimately from our weekly stand position, it looks pretty positive, right? Without kind of analyzing the market in great detail, it's a pretty significant move to the upside. The underlying data, though, is where the issues really sit. But there are some positives that we can take from our weekly close position, because unless price really drops down today, I think we're in a pretty big and positive position to trap out even more bulls on the smaller time frames. But let's go ahead and take a look at this, right? So we can see that we've been doing something on a much bigger scale, right? Higher highs and higher lows have a tendency to break downwards, whereas where we see lower lows and lower highs, they have a tendency to break upwards, right? And we can see inside here, if I grab myself the parallel channel, just as an example, if I were to start taking this at a slightly bigger scale, right? We had all these minor ones in here. But if I start taking it from here to here, in fact, that's probably not quite the right level, but you can see that we are starting to form out this channel to the upside, right, where we can start to analyze this as higher highs and higher lows. And again, as I said, they have a tendency to break down, and this is a big one, much bigger than what we saw up in March of 2022, bigger than what we saw in May of 2022, bigger than what we saw in August of 2022. This is at a much bigger scale, and at some point we do have to correct down. You can go up quite a bit, but essentially eventually you end up with these moves that go in the opposite direction. Now we've got these minor ones that were taking us up here a little bit, similar to kind of what we saw in these kind of ranges. But at some point when we see this like this, we end up having to kind of think about the move that happens next, which will be a corrective one, and profits will get taken. Now, as I come over into this particular graph here, or chart here, we can see that we are following smart money concepts on this particular chart. And that's of interest to me for a couple of reasons. One, it helps us understand the market structure, and it helps us understand where we've got potentially issues or potential issues with imbalances in the order book, such as this one down here. So if we were to think about corrections, a 17K correction down to 17K with a maximum kind of push of 28, we'd have to come down to the low end to kind of finish this one off. And to be honest with you, I think that would actually be pretty good. It would mean that no new lower low, and it would be a nice healthy correction. I still think we have to come down lower given the WXYXZ kind of scenario, or even a bigger ABC structure. The bigger macroeconomic climate doesn't give us the confidence that we need. But as I said earlier, all eyes are on the Fed. If the Fed decide to kick this can down the road, we could be looking at a mini bull market before we actually start to see the next big rug pull, and I think that's going to be absolutely massive overall. And again, that can would just get kicked down the road if they do a 0.25 interest rate hike, or they just do nothing, or they pivot. They essentially are screwing themselves long term. Now, if they go 0.5, which is what I think they need to do, they need to stick to their guns and not undo the work that they've already committed to, then I think we're just going to come down into the Z wave. Now, ultimately, one of the things I want to talk about today in this video happens to be the positives, right? So we know that there's a lot of negatives in the macro sentiment and the macro kind of economic climate as we look at things around the world. It's not looking positive at all. However, there are some positives that are happening here within Bitcoin. And one of the ones I want to talk about is this one. Okay, so the Gaussian channel. The Gaussian channel is something that we used to talk about quite a bit. In fact, actually, I'm going to see if I can pull this one up. This one on the Gaussian channel. This is Bitcoin USD. And Bitstamp is our data source. Now, if I zoom out of this, we can analyze what was going on. Let me actually turn off the smart money concepts because we don't need that one on here. On this weekly chart, we can acknowledge that over this side here, when we closed inside the Gaussian channel, we find it over here. Okay, we did get pulled back down and then we rallied back through, and we were in this kind of bullish state of play. Over here, we closed inside it and we basically stayed inside it and we rallied on through. Right now, we have the potential to close inside this Gaussian channel. Now, this Gaussian channel closing position doesn't necessarily give us a lot of confidence, but it does give us confidence that we might be finally moving in the right direction. As in, we've been able to move through one of those moving averages. It looks like we're finding resistance on the mid level here. But a pull to the downside, as I said, that around that 17K could be a pretty interesting level for us to then bounce from and then start to move back up and get that confirmation. Ultimately, what we're really looking for is a closed position above the Gaussian channel. Once this Gaussian channel gets closed above at this weekly level, okay, I think we're going to be in a really strong position. Okay, now with that being said, ultimately, what we want is we want the Gaussian channel to go green. Once the Gaussian channel has turned green, then we know that we're definitely in a bullish market, and we can kind of look at it from that kind of point of view. Now, this is not an exact science because the Gaussian channel has been wrong in the past, and there was things that we were looking at previously that were leading us down into bear market situations, and we did actually have this particular situation up here that actually kind of invalidated that kind of thought pattern. That being said, it still led us into the bear market, even though we did have this kind of little bit of a blip on the radar. So this one up the top end, this could still be that we are leading into a bull market if we do close in here, or it could all just come to a complete close. Keeping an eye on it. And it could be something, it could not be something. It's one of those, like, there's not enough data in Bitcoin's history to really know 100% categorically whether this is going to be a good indication of things to come or not. But I did find it interesting that we're now back up inside the Gaussian channel after recently getting kind of rejected from the lower end. So up here is where we are. Personally, I still feel that we are basically being manipulated into this direction. I don't think there's anything more going on there than that. We can see that we're above the 50 and the 200 EMA on this chart. So again, it's going to be interesting to kind of see how that plays out overall. ultimately, though, I am still bearish, thinking that we have to have a correction. I don't want anybody FOMOing in at the top of a structure. It doesn't make sense to do so. I still think there's a potential push to 30K, as I spoke about this morning, but at the minor levels. Those are at the smaller time frame stuff. The bigger macro pieces are saying that we should be thinking about corrections, and they should be natural corrections. We don't have to see new all-time lows, or new lower lows, I should say. It's just something that I think is likely to occur, considering the on-chain data does not support the idea that a bottom is in. So let me go ahead and just recap on that. Okay, I'm not going to talk through a lot of this. Basically, we've got a lot more Bitcoin going onto the exchanges than has been coming off this year. This hasn't changed. We've been kind of floating around, being a more neutral. I think we're definitely now flipping more bearish at that macro inflow outflow level. Now, really what I want to talk about is the wallet counts. The wallet counts are an indication as to how many people are actually participating in Bitcoin's, I don't know how to articulate it. Basically, it's how many people are actually involved in Bitcoin. Let's leave it there. We can see Bitcoin dust is over 0.01 BTC per wallet, right? There's 11 million wallets here. Now, I did see someone in our Discord server share a tweet about someone saying that there was an extra 1 million wallets that was created in the last 24 hours. I don't see that here. And do you know why I don't see that here? It's because if they do have, and if we have actually created an extra 1 million wallets, they have less than 0.01 BTC in them, which would be really, really minor stuff, right? I'm only tracking any wallet that has over 0.01 Bitcoin, because I think that's at the most smallest level that's meaningful, right? And there's 11 million here. Yesterday there were 11 million a day before that. There were 11 million a day before that. There were 11 million a day before that. 11 million a day before that. In fact, actually, I can go all the way back down here and say since February we've only been hovering around the 11 million. So we know that there's not an extra 1 million wallets that have been created that are meaningful. If they've even been created, I don't know where that data comes from. I haven't seen or verified that source of data, but I've seen people communicating or sending like tweets and stuff out about it. I don't see it. And this comes from a reputable source of information that I have verified, and I don't know where that's come from. So it is what it is. If there has been an extra 1 million wallets, it hasn't come, or they haven't got at least 0.01 Bitcoin in them. They could have 0.001 Bitcoin, and sure, they could exist at that level, but we'd have to argue, is that really significant? Probably not. Anyway, moving on, we can see here that we can see a small decrease with Bitcoin dust wallets, the wallets that have over 0.01 Bitcoin in them. Now, from the retail side, we are starting to see exactly what I want to see. And I want to see retail taking their profits here, okay? And we're starting to see that. You can see that within these wallet counts decreasing. This is an indication that either Bitcoin's flowing to the exchanges, or they've already sold the Bitcoin on the exchange, and we've seen transfers occur between different size wallets, right? So we can see that all of these retail size wallets have been decreasing. That's exactly what I want to see. And I want to see that because it's the only way that the wallet counts are going to increase here for the whales. And the whales have to have over 1,000 Bitcoin in their wallet to be counted. Okay, so this is important, right? It's a sum zero game. There's a seller, there's a buyer. Okay, you can't just have a wallet count increase out of nowhere, okay, without someone selling it to them in the first place, right? So if we're seeing retail sell, then we're seeing whales buy. And this is important because back in 2018 is exactly what we saw. We saw retail wallets decreasing, and as the wallets of retailers were decreasing, the wallets of whales were increasing. This is important because we have to consider what's going to move the market. We need to see significant influence at the whale level. Okay, these are billionaires, institutional investors that own media outlets, for example, right? They're able to push the needle of Bitcoin in a direction that they want it to go in. And at the moment, where it stands is that the whales haven't really been participating. Okay, they've not been coming into Bitcoin until recently. There's a little bit of an uptick here, right? And this is because all the money has been provided so far has come from retail investors. So until retail investors are out of the market, whale investors can't get into the market. And if whale investors can't get into the market, then to think about Bitcoin going up to $100,000 is a little bit daft, in my opinion. Now, there are ways that Bitcoin could rally, okay, and that would be outside of the institutional investor. But we would have to ask ourselves, if retail investors were spotting these things, then I would have thought, whale investors would spot these things, and as such, we would basically be able to articulate that they'll be in the market as well. And that would be that the US dollar crumbles, right? And if the US dollar devalues, then you're going to need a lot more dollars to buy your Bitcoin, right? And I've seen various other things kind of circulating around about how Bitcoin could go up to $1 million in the next 90 days. All this kind of bullish nonsense that you see in the space, right? Absolute BS kind of stuff. Because that's not going to happen. It's just, yeah, I mean, I'll be surprised if it does, right? And you can always come back to this video and tell me, look, you were wrong. I'm fine with taking it on the chin if I am. But it doesn't make sense that Bitcoin goes to $1 million in 90 days. It's just absolute garbage. But, you know, whatever gets the clicks and all that kind of stuff. But essentially, the reason that I bring this up is there are ways that Bitcoin could rally without institutional level investors. Although I like to focus on the institutional investors because I think that's the most logical way to approach the market, we should consider some other factors that could be in play. One is that the dollar does crumble and the dollar does get devalued. It could rally Bitcoin quite a bit, but it would be short-lived in my opinion. It's not like that's going to be a sustainable growth mechanism for BTC. So we have to kind of consider that there's a lot of things going on in the world that could potentially devalue the dollar and could push Bitcoin into those highs because you're going to need more dollars to buy Bitcoin. On the back of that, though, there will be strength in other currencies. And if you're looking at Bitcoin against those other currency pairs, then you might start to see differences. And this is something that you saw with the USDC when the USDC depegged and devalued against Bitcoin. We saw Bitcoin spike on a USDC pair, right? It'll be the same with a USDT pair or USD pair or whatever, right? So there are ways that Bitcoin can rally without institutional investors. I just do not think it's something that is overly likely. Now, trying to be more bullish as I can, it's hard with the data doesn't suggest it. I think the Gaussian channel is an indication of good things that could be on the horizon here for Bitcoin. It's a little bit too soon to really say, and I'm not overly confident on the Gaussian channel since everything that happened over here in 2021. But again, you know, I'm willing to kind of monitor the Gaussian channel, keep an eye on it, and use it as more data becomes available to it. But for now, I think there's some positives to be taken here. I do think a bit of a move up towards 30K is needed at the minor level, but I do think a correction down towards 17K has to happen at some point soon at the macro level. I'm going to leave the video there. Let me know your thoughts and comments in the comments section down below. If you found it useful and informative, smash the like button. I do appreciate that. If you're new to the channel, subscribe. And guys, I'll catch you all in the next one.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.